There's a classic phrase in football that we use is like, don't make a bad play worse. And that can easily be applied to trading, right? If you're running around in the backfield, do you take a 20-yard sack or do you throw the ball away, right? And move on. Like you don't want to just catch a falling knife and ride a stock down 30% when you could have cut your loss early. And so I think there's a lot of cool lessons that I learned from football that apply to the market and to life in general, but embrace the suck and one play at a time.
Welcome to Trends with Benefits, Matt. Thanks for joining the show.
It was great, Ed. I know we've talked about this for a while, so this is fun to finally be doing this and in the midst of a little market craziness. Perfect timing.
Yeah. We're at, I say, mid-November right now that we're recording, and still a lot of questions in the market. You know, you're managing director at Silverlight Asset Management. You cover tech, communications, and crypto sectors as well. So I think this is a topic directly for you. And also want to talk about your background and how you got into the space and your athletic background as well. I think it's a fascinating story, and I think there's some stories there for people in terms of perseverance and motivation and dedication, things of that sort. So in your role right now, so you're head of research for tech, communication services, and crypto sectors. What does that mean? Are you looking at individual companies? Are you looking at macro trends? Or are you also looking at public or in private companies?
We don't do a whole lot of alts. There are a few funds that have come across our desk that, whether it's marquee venture deals like the SpaceX's, Databricks, Andurils of the world that we have access to, it's not our bread and butter. Primarily equities in the market and managing assets for clients in that capacity based on a few different strategies is how we've been successful over the years. And so, yeah, I'm wearing a few different hats right now as we're a growing firm, and it's really exciting to be a part of. But I've always been obsessed with tech in general, not just in the market. Ever since I was a little kid, I was the household AV help fixing the VCR and plugging in cables in the back, and that expanded over the years to, I guess, to AI in the future of where we're going. So I love that sector as a whole, whether it's tech, comms, any new exciting ventures that are popping up. But I'm keeping my eyes over every sector, over everything. So we have a kind of a top-down, bottom-up approach, right? We're not strictly looking at purely fundamentals for every single pick and just blindly investing that way. We're seeing how everything fits together, whether it's in a cyclical fashion of sectors rotating in and out, or from a macro sense and economic data, where we are in a regime, right, from a growth to inflation regime. So all that ties together. And at times, at most times, tech is one of the leading charges of those regimes, but we need to also know when to get out, because as investors know, like, they'll ride you up, but then they'll bring you right down, if not more violently. And so always keeping an eye on where we need to be and when we need to get out.
And so you're talking about, if I understand you right, a mix of using fundamental and technical analysis at times. Is that right?
Right.
Yeah.
Yes.
Okay. I mean, you're a big proponent of following charts. I mean, I guess you sound like you're pretty balanced in using one or the other. But
I'm obsessed with looking at charts, and my wife has told me it needs to stop at a certain point, right?
do you post them on the walls? Or
not having a 9 to 5 makes it, challenging to structure your days. And from my background of playing football or quarterback in the NFL, and the film study and the prep that I'm used to for whether it's studying an opponent in a game plan or learning a new playbook, right? I'm used to just going all in and kind of putting horse blinders on and studying as hard as I can. And so I've applied that in the last couple of years to the markets and to technical analysis and to charts. And I think they paint a great picture of what has happened, right? And can give some indication of what will happen. But there's a lot of factors that go on under the hood outside of charts as well, in terms of order flow and liquidity that drives that too. But I love patterns and angles and trends and how it all fits together, and it just kind of clicks my brain. Yeah.
That's awesome. Well, let's talk about what's going on in the market right now, particularly with the AI trade. Perhaps we'll start there. One of the questions I keep hearing on the news media, and I've gotten it too. So we have a semiconductor ETF, a couple of them, and people ask us about this all the time: is are valuations stretched in the AI trade? Should we expect a pullback? That kind of thing. I'm just kind of curious how you approach the market, approach AI or tech at this point in time.
I think there's no question that valuations are elevated. I think if someone's arguing against that, they're missing sight of what's really happening. I mean, the last 10 years, the price to sales multiple of the mags have increased tenfold, while the S&P as a whole has barely increased by twofold. And so you have this massive gap in the leaders, right? Not just the mags or mega caps, but I would say kind of this tech and AI boom in the last couple months, right? Especially since April. And it's been ramping up, whether you identify it from the Bitcoin miners turning into HPC plays, right? Or the energy plays associated with the infrastructure, right? And the data center plays. There's always themes to play.
Yeah.
And that's what I love about VanEck is the exposure that you have to play in these themes. And at the same time, you have to know again when to ride it, when to get out. But I don't think this is a trend that's slowing down anytime soon. It's going to correct. I mean, it's been on a massive run, so you can't expect it to go up every single day. But when you take a look back and look at the impact, just AI as a whole, right? Most people think of like, hey, Siri or Gemini or ChatGPT, whatever it is, but it's going to be woven into everything you do in life that you don't even realize, right? Kind of like the internet, and whether it's Internet of Things in your house or your car that you don't realize is operating in the back end. It's going to get to that point, and it's trickling in already, but it's going to be pervasive everywhere. And so I think the struggle is, I mean, what we've seen in the last week or so is, what's the time frame of the GPUs? What's the lifespan, and how much are we putting too much emphasis on this infrastructure build out, right? Do we
Mhm.
do we really need that? Is this technology going to get faster and cheaper and quicker to where we don't actually need this much power demand? So I think there's still questions to be answered, but the sector and theme as a whole has a long runway.
Yeah, I mean, I guess it's kind of time to mention the way perhaps you might approach it or answer that. It's like over the long term, there's a long runway. Over the next month, I guess who knows? Maybe it is
Right.
relatively stretched. But it almost sounds like yeah, valuations are elevated, but maybe they could continue to stay elevated, just kind of given the momentum in the space.
Yeah, and you hear a lot of comparisons to the dot-com bubble and some other times in the market, and I think it's you can learn from history. No time's the same. I mean, the environment back then was different, and liquidity, inflation were different, and so
Company fundamentals, they were different, right?
fundamental. I mean, the amount of cash that these current companies are generating is astronomical,
Yeah.
and so when you hear like, yeah, there's the capex is spending billions upon billions upon billions. I mean, in total trillions of dollars, right? Like you didn't have those same numbers in the dot-com bubble, and I I I'm a fan of you ride the wave until it ends, right? A trend is your friend until it ends, and this is currently a trend that you can't argue with, and so don't fight it.
And from a chartist's angle, how does it look today? Does it look like you hold tight, ride the trend, like you said? Are you adding positions to this trade, or perhaps waiting for a better time to add or put on new positions?
I wouldn't full port right now. Absolutely not. I think there will be better setups, whether that's consolidation. I mean, we've been on pretty much a straight trajectory up in the last 6 months. And so the last couple days, last week or two, have shown some toppiness, right? And from a technical standpoint, and whether that's, I wouldn't say capitulation, but it's profit taking or other flow thematics that are happening under the hood. It's interesting to watch, can we break that resistance level that we've kind of set around 68, 6,900 or so in the S&P. I think there are certain stocks where you can get individual setups, absolutely, based off timing and depending on what indicators you use.
Are there certain areas of the tech or AI trade that you find perhaps more interesting? Even you can put a time dimension around it, short term or long term. You get the big trades that everybody talks about. Seems Nvidia, for instance. Are there other areas that you find interesting that you think people could look for opportunities in?
I love the energy aspect of this whole
Hmm.
play. And I love the fact that it's not limited to just data centers. I mean, as a whole, the United States is lagging behind China and other parts of the world dramatically in terms of nuclear power and our energy grid. And so, whether we do go all in and the legislation passed and we get full funding and tax benefits for these data centers, even if that doesn't happen, we need a massive revamp of our infrastructure.
Hmm.
And so I think there are many energy plays that it's such a small sector of the S&P now, which is crazy how much it's fallen. I think in the 80s it was 30 30 something percent down to less than 10 now,
Yeah.
right? Like Nvidia has a larger market cap than the entire energy sector of the S&P, which is crazy to think about. But then you realize the impact not only the big caps have, but a lot of these small caps that are doing incredible stuff, whether it is the nuclear play or the battery storage or nat gas, I think is going to have a big run. And
Hmm.
so how do you approach that in terms of this AI play? Well, it's correlated, but also it has a lane of its own to run in. And so I think finding plays that aren't strictly tied in, whether it's the chip plays, like those are pretty much directly tied into the data center server plays. And so I think diversifying that thought can help.
That's great. What's your take on quantum? Are you following that much at all, the quantum computing developments?
I am, and I'm not a quantum expert in terms of the actual quantum computing capabilities, but following these stocks, it's incredible because as a trade, it's a trader's dream to be able to trade that whole quantum sleeve, right? It's an investor's nightmare when you're putting money into these unprofitable companies that in talk about insane evaluations, right? They're not making any money and it's all hopes and dreams. And granted, investing and a stock success, their story has a large part to do with that, right? Whether you call it theme or story or narrative, the thought of, oh, quantum's going to take over and we need an answer, right? Or even the scares of quantum breaking Bitcoin or all you hear a lot of narratives and stories, and it's been fascinating just in the last year to see how narratives shape everything, how they shape sentiment and how they can completely change an entire portfolio in the matter of a couple of days. So for better for worse, I mean, we traded Brigetti earlier this year for a 100% plus gain, but we need to get out. We were in Oklo for a massive gain and got out, and we treated those as trades, not as investments. And so I think it's important to differentiate, and especially with quantum, what's a trade, what's an investment in that regard.
Can you talk about your decision of getting out of, say, like an Oklo or something? What was this? What do you look for? What was that setup? Was it just a hurdle rate? You made 100% on it or something and you decided to take some off the table, or were you looking at technicals?
That was pure technical analysis. We used DeMark indicators as our primary charting tool, along with other indicators, and that had reached an exhaustion signal to the point where we were happy with our gains and we knew that it had run its course in our time frame, and it was a great trade. And other investments that we have, we'll let ride through a little more topsy turviness. But for that trade, I think it was around the time it came out, there were some issues with leadership as well. So our thesis changed
Hmm.
as well, right? It was no longer just a pure nuclear play. There were some other headwinds in our mind. And so combining technical analysis with other data at your disposal, I think is important.
Yeah, absolutely. What is your take on the whole quantum computing, Bitcoin, quantum breaking Bitcoin, that kind of narrative? Do you think that's an issue?
I don't buy it.
Yeah.
I don't buy it. One, because I think Bitcoin is malleable and can fork and has the ability to navigate anything that happens with quantum. At the same time, if your Bitcoin wallet can be hacked, we have many bigger problems at hand, right?
Hmm.
You're whether it's the energy infrastructure grid or other data centers, databases that are running on Windows 98, or even the financial system as a whole, SHA-256, like it, we're going to have big problems if that happens. And so, does it happen in our lifetime? I don't know. It could. It could very well not. And I don't think it's a threat to Bitcoin right now.
One of the other things, perusing your website, you guys recently put out a blog on tariffs. Got kind of curious if you have an opinion or any comments around the potential for tariffs to be overruled by the Supreme Court and what effect it might have on companies in the tech sector.
Let me check my data. Polymarket says 36%. That's our number one fact, our gauge right now on whether they'll pass. I have no clue. I mean, it seems like it's trending in the direction that they will be shut down, and I don't know if that's getting priced in now with the market in terms of a reset. I feel like it would be a tailwind for the market as a whole, given the bounce back and the ability to spend, especially for smaller companies, right? Not just public but private companies. I mean, it's kind of near and dear to my heart because my mom and sister actually have a small business where they make bows for baby girls. Okay, and they're made overseas and they're shipped through TJ Maxx, like Costco, and they've been hit really hard. And they haven't had any subsidies or tax exemptions or tariff relief like Apple or Nvidia, right? And I'm thinking that's just a microcosm of how many other small businesses have just been strangled with a reality, whether it's a clothing startup or another materials company that's just trying to do good, and they've been just smacked down. If those are alleviated, right? One, they have more confidence to spend, right? Because that was the hard part in March, in February, March,
Mm-hmm.
after, and especially since April. The hard part was like, all right, how does this really hit, right? Okay, we have tariffs, so it's going to generate revenue, but no one can forecast now what their spending is going to be, what their purchase orders are going to be. And so I think if they are alleviated, that's a whole other question about the GDP and our debt ceiling, right? How do we handle that? But for the mean term, in the recent term, I think it's a definite tailwind for businesses in America.
If those got overruled or overturned.
Yes.
Yeah, right. Yeah, it would seem that would make sense. Maybe we can talk a little bit about the strategies you guys run. Maybe you can just give me a brief description of them. And I wanted to ask you some questions about the allocation process in that regard. But you guys run, what, 5 different managed strategies?
Yeah, three main strategies take the bulk of our allocation for clients. Our main one being a core equity sleeve, which matches the S&P 500 as a benchmark and aims to beat it every year, which it has with less drawdown, less risk. And so I kind of mentioned our process, whether top down, bottom up approach to how we navigate that. But that's kind of our bread and butter. And then we have it's a fortress income strategy that is for our clients that have less risk tolerance, maybe a shorter time horizon, that want a pure income play. I guess that would typically be the 40 sleeve of a
Mm-hmm.
60/40. it's weighted much less bond exposure than the traditional 40. So it's whether that's dividend plays. There's some fixed income alt plays in there as well, tied to real estate or whatnot. And then if you combine those two strategies, we have a core balanced account. And so that kind of provides little less top end growth than core equity with a similar risk tolerance for less drawdown. But it's a middle ground, which clients love, and it has performed incredible. And then on top of that, we have Dobermans of the Dow, which my partner Michael kind of coined writing in Forbes years ago to beat the dogs of the Dow as a strategy, and it's the best of breed in the Dow. And so we take through a screening process that we've developed through thorough back testing the top 10 picks in the Dow that rotate monthly, and then add in some of the best picks from core equity. So it's kind of a hybrid, but it's also beat the Dow year on year for since inception. And then we have an international sleeve as well to have international exposure for clients. We have international stocks or ADRs in most of our strategies, but this is a pure 100% foreign play on international stocks that beats the Equix.
Which I assume is doing pretty well this year, kind of with dollar trends and what have you.
Yeah. Whether it was Brazil or India or Korea, South Korea, we've had some impressive gains in that, and it's usually between 50 or 60 tickers stocks in there, so it's pretty diverse of companies. We'll occasionally throw in an ETF that represents a country if we can't find enough ADRs that have exposure to that theme that we like. But for the most part, we're finding good companies that whether it's a dollar trade, right, or a currency carry that we can get alpha from, or just they have better evaluations. Like you can find quality at a discount much easier in foreign names compared to the S&P, at least.
Yeah, absolutely. And are your portfolios, you just said something about the international types of securities you're buying, are they primarily individual securities, stocks, and or bonds, or it sounds like you will use ETFs at times, or are they more primarily ETF portfolios?
They're mainly companies. They're mainly whether it's OTC or ADR stocks of that specific security company. That's what we're going with, and that comes from researching the company and again seeing how it's trending, how it fits into the cycle from a macro sense, and if revenue's growing and it's got other tailwinds. So the ETFs come in if again we don't have a good enough exposure to what we're trying to play from what we see from a macro sense. But yeah, no bond exposure, purely equities.
I know we talked about AI and we didn't really talk too much about crypto yet, but and tech. Are there other themes that you guys are watching that are in your portfolios currently from a thematic standpoint?
We think hard assets are a must. And we've talked about Bitcoin a little bit already, and we've ridden that train since. I mean, I've been in Bitcoin for almost 10 years, not 10 years. And so I've been exposed to the tokens, now managing other people's money since the ETFs came out. Has made it a lot easier to get exposure to clients. And as an RIA, not at a big bank, we have the ability as a fiduciary to get clients exposure to that. And so we have full conviction on having exposure to hard assets as a whole, given the weakening dollar and inflation and the way that's trending. So Bitcoin is a portion of our sleeve, along with gold, silver.
You consider it a hard asset?
Bitcoin?
Yeah, or no?
I do.
Yeah, okay. Treat it like the digital gold.
You can treat it like digital gold. I think the fact that it's deflationary makes it a hard asset,
Gotcha.
and it's got a fixed supply. And I think it's still TBD whether it's risk on, risk off. That's another question. But in terms of a hedge against the dollar and where that's headed, Bitcoin fits into that thesis.
Yeah. How do you go about sizing a Bitcoin position? We talk to advisors. More and more advisors are becoming open to the idea of including Bitcoin in portfolios, perhaps instead of buying it directly, buying a model portfolio that has a sliver of it in there. But how do you approach the sizing? Is it a rule of thumb, 1%, 5%, or do you approach it another way?
I don't think there's a hard line you need to draw. I think it's whatever you feel comfortable with if you understand the tech. And I know some people who that's all they study and they're 100% Bitcoin. Now, I don't think 100% anything is ever appropriate. I think you do need to be diversified, but I would say probably more than you think for the average investor.
Hmm.
That's not retail or millennial or Gen Z focus brought up with crypto, right? And we've been anywhere between 5 and 10% at times of exposure, and that'll fluctuate given how the ebbs and flows of Bitcoin, and that's not strictly Bitcoin. We have coin exposure, or we've traded MicroStrategy in the past. I wouldn't say that's an investment long term, at least right now, or other treasury companies we've traded, or just other exposure to Ethereum even that we've had. And so as a whole, I think you just have to evaluate how it fits into your portfolio and how you evaluate, whether it's an investment long term or if it's a trade or what the time horizon is on that.
Yeah. And now you mentioned you were in Bitcoin for 10 years or so, or you've been following it for at least that period of time. How did you, well, I know the story is that maybe it's related to your moniker or the nickname of Bitcoin Barkley. Maybe you can talk a little bit about that. But I'm interested in, how did you learn about Bitcoin and then get so comfortable with it so early on to even ask to be paid in Bitcoin?
Yeah, I asked the 49ers in 2017. I signed as a free agent to play for San Fran, and in my mind, I'm thinking, oh, this is a perfect opportunity. We're in the Silicon Valley. This is the San Francisco 49ers, a historic franchise. I'm going to ask them to pay my signing bonus in Bitcoin. This will be great. A win-win for both. It'll get them in the space early, and it would be a win for me, obviously, with Bitcoin. And I was a little over my skis at the time because they didn't have any way to get it on their balance sheet or to actually pay me in Bitcoin. And so after I asked my agent, I asked the GM, John Lynch at the time, and someone else running their finances, and it just didn't happen. And I don't blame them. I mean, we're still barely at the point where corporations are where they have the ability, right, to pay directly in Bitcoin. And you've heard headlines over the years since then. Good buddy Russell Okung took his salary in Bitcoin. Odell Beckham Jr., Saquon Barkley have done marketing deals in Bitcoin. All of those since have been converted via third party, right? So
Mhm.
there's no actual direct Bitcoin to Bitcoin transaction on that scale. Yeah, and that's what in my mind I was like, oh, this is perfect. We'll just do that, and they didn't have that in place. But I think going back to the beginning part of that question, like what clicked. So that was 2016, 2017. Bitcoin just really clicked. I read their white paper. I remember hearing about it in college a few years earlier and equating it to some like bit auction or something online where it was like some random put a token in and you like could it was essentially like a lottery. And I'm still so mad that I confused the two or didn't take the time to research or learn. But I read the white paper and talked to a lot of people in the space, which was a small group, I think, back then. But I was always taking trips up to Silicon Valley in the off season when I was playing football, and had the fortune of sitting next to a guy named Matt Mazzio, who was a partner at Lowercase Capital back in the day, a venture capital firm. And he was talking to me about Ethereum and Bitcoin. And at the time, Ethereum had just gotten started. And so I knew his track record was good and I could trust him. But I went home after talking with him on a flight back from San Fran to LA and researched for about 3 weeks or so, deep dive into the benefits, and it kind of just clicked. And so I pulled the trigger first on Ethereum and Bitcoin not long after that, after realizing it was a better long term play, and it's the king of the hill. But I have a ton of reasons as to why it clicked if we want to dive into that, but
Yeah.
I just saw it early on. Yeah.
That's awesome. Yeah. Why did it click for you?
I think the beauty of it was the fixed supply was one thing.
Hmm.
And I loved, I remember, getting, I think it was gas my rookie year and thinking back to even high school. So this was only a 5, 6 year gap. And I remember just how much the price of gas had changed. Like my tank, it took like $100 finally to fill my tank, and I was like, "What is
Huh.
happening? Like, how is?" And I know gas prices fluctuate, but I kind of just hit me with the deflationary aspect of Bitcoin too was very appealing. And then you look at the actual utility, right? You can think of it as digital gold, but have you ever paid for anything in gold? Have you ever traveled anywhere? Like if you need to actually bug out or bail and get out, can you take even $100,000
Yeah.
or on a plane, right? Of
Heavy bar.
gold, right? Or transport. If you need to transport 7 figures plus, you can't do that with gold without making a scene or making it obvious. So the ease of use, the cross border capabilities, the transaction speed, and just the growth potential given simple supply and demand. I mean, if there's anything we talk about today, it's all because of supply and demand in the
Hmm.
market. And when there is a limited supply, granted there is demand, that just further exasperates itself to the upside.
Yeah. Yeah. It spoke to you. It spoke to your tech nature, I think, and the economics of it. But yeah.
Yeah, it clicked, and I'm grateful it did. But yeah, Bitcoin Barkley was my locker room nickname because I was trying to save everybody from fiat back in every locker room I was in.
As far as newcomers to digital assets, what do you think are some of the biggest pitfalls, or how do you help educate newcomers to the space and to protect themselves and understand it better?
Well, I've been through a lot of crypto environments now, whether it was, the forks early on, the ICO craze, right,
Yeah.
in 17s or so, to, 2020 was kind of the DeFi staking pooling craze, or NFTs, took hold. And I think, unfortunately, there are a lot of bad actors in crypto that are purposefully or not purposefully just taking advantage of people, right? And so I think people see, meme coins recently and as a casino, and just they see the 4,000% gain in one day, and they're like, oh, that could be me. And I think there's a tremendous appetite for that gambling mind, unfortunately. And you've seen this like with the rise of Robinhood and zero DTE, right?
Mm.
Of traders, the amount of activity where they want to hit it quick. And it's you got to be very, very careful because I'm in Bitcoin for the long run, and I've traded altcoins over the years, but by far the biggest holding and long term position is in Bitcoin. Still, one of the best trades in my career was XRP, less than a cent. I got in early. I ended up going up and meeting their founders and going to their headquarters in San Francisco, and something just didn't feel right. It didn't seem like a actual grassroots operation. It seemed like there was another agenda at stake.
Hmm.
And so I actually got out. I think it was 40 cents or something, and it was a great trade. But since it's gone to $3, should have held on to it as a trade. But I didn't like the thesis of why I was investing in it. It seemed like they were trying to undermine Bitcoin, which has been proven right now with whether it's legislation or other cross-border payment systems. And so I think you got to know what you're investing in,
Hmm.
and if it's a trade, you got to better be on top of it. But there's a lot of bad actors, and I would stick with the tried and true winners.
When you think about how far it could be any asset, but like Bitcoin, for instance, it has come and traded around the $100,000 mark, and you're a newcomer and you see how far it's come. It's like, well, okay, have I missed it? Can it really go higher? How would you respond to that? Is it still a buy longer term for new people?
Yeah, and I think if you're coming from a traditional finance background, right? If you're looking at where's the intrinsic value or what's the valuation, like is it too high or not? It's a completely different approach.
Yeah.
And I think, like I said before, if you simplistically look at supply and demand and realize that there are there are global reserves, there are nation states, there are corporations, not just a grassroots movement anymore buying Bitcoin because of one, the ease of use, the transferability, and the potential growth. It's not, I would say it's not too late. Now, it can be late in an intermediate term, right? If you're buying at a top and it draws down. But in 10 years, like you're gonna look back and say, I wish it didn't matter when I bought, that little dip or not. So that's my framework on it because I'm in it for my kids and their kids, like buying real estate in Manhattan in the
Yeah.
1930s, right?
Yeah, absolutely. And you mentioned this earlier, but kind of fascinated with the fact that during when you were playing football, during in between seasons, you'd go meet with venture cap investors or you talk to people in Silicon Valley. Can you tell me a little bit more about that? How did you have the foresight to go do that? But I thought it was really great of you to do that. Were you already thinking about post career what you might do, or how did that come about?
Yeah, there was a time when I thought I wanted to pursue venture capital. And I had a friend who is a friend now, more of a mentor in my younger years, named Ryan Neese, who his dad is Rodney Lott, who played safety at USC and Hall of Famer in the NFL. And Ryan played in the NFL as well, and we connected. When he retired, he was really tied in with that Bay Area in ecosystem, and he actually launched a fund to fund that invested in a lot of early stage, kind of all over the place, but startups. And so he would invite me up, whether it was we'd go to CES in January in the off seasons. I loved all the gadgets and the tech, but it was also a time to meet with founders and see different products and tech that I liked. But then going up to the Bay, it was really cool to meet with both founders and go to firms and actually see it like how these work. And I was just trying to do something outside of football to learn and grow. I've always loved stimulating my mind to challenge myself. And I love the aspect of venture where one, it's a tech or it's a founder that you believe in, or it's a product that you can see can change. But two, like how can you influence the outcome of that, right? As opposed to just unless you're a massive whale as a shareholder in a public company, you're not going to really do too much to affect the company. But in venture, with your network and connections, you can really sometimes shape the outcome as an investor if you open the right doors or help lead them down the right path, right? And so I just kind of loved everything about that and the challenge and the puzzle and how it all fits together, and realized that as a father of three now, retired, wanting to stay home most of the year, whining and dining founders and traveling and do all that wasn't really my cup of tea for what I wanted my future to look like. And so I've loved the markets and it's where I am now. But I loved challenging myself and pushing my mind in the offseason outside of football.
Can you articulate a personal philosophy? It sounds like you might have kind of a personal philosophy for bettering oneself and doing exactly what you did.
One thing that I love that I've learned from some Navy SEAL buddies is to embrace the suck. And it's easy to apply when your physical environment sucks. Like if you're training, working out, or in the military sense, like going through Hell Week, what they do in buds, or you're overseas getting shot at, like that's a completely different suck, right? But the mentality of embracing that and how can you overcome this or get through it? I think it's a lot harder for both for me and for people in general to apply that to the mental game. And it's honestly, in my opinion, what sets SEALs apart as the greatest warriors in the world. They've just kind of harness this ability to whatever's going on, physical or mental, to embrace that, to flip the script and to say, all right, yeah, that's a problem, but how are we going to fix it? How are we going to handle it? Not just to wallow in, oh no, there's no hope or whatever. And so I think I learned that early, and then playing quarterback, right? You throw interceptions. I was going to have good games and bad games. There were going to be good plays and bad plays. If I were to have dwelled on a bad throw, a pick, a sack, right? Coming off the sideline, going in for the next drive, if that was still on my mind, that was going to affect the way that I will play moving forward. And so I had to develop kind of a switch to be like, all right, moving on, next play, right? So it's kind of this embrace the suck and next play mentality to where I learn from my mistakes or I learn from the past, but it doesn't affect my mentality moving forward. I can be pissed off if I threw a pick and might come back and try to throw it a little harder into a tight window to make a catch. But I think learning those skills or attributes of football and how I can apply them to my trading mentality, because not every trade's a winner. You have to deal with that.
Mhm.
But how do you minimize risk, right? There's a classic phrase in football that we use, which is like, don't make a bad play worse. And that can easily be applied to trading, right? If you're running around in the backfield, do you take a 20-yard sack or do you throw the ball away, right? And move on. Like you don't want to just catch a falling knife and ride a stock down 30% when you could have cut your loss early. And so I think there's a lot of cool lessons that I learned from football that apply to the market and to life in general. But embrace the suck and one play at a time.
That's a good saying. I was roommates with these guys in college. They were Marine officer candidates, and I was just amazed that we'd go out drinking the night before, whatever, and they'd get up at like 4 a.m. to go for a 5-6 mile run. I'm like, how do you guys do that? And I remember one of them telling me, you don't have to like it, you just have to do it. And that when I was running, later in life, kind of running, training for marathons, and I would tell myself that just got to do it. When it's 50 degrees outside and it's cold, just got to do it.
Oh, there were so many days I'd wake up not wanting to practice, train, go to work. But when you have a goal in mind, right? When you've made up your mind of I'm going to accomplish this, and then you work back of like, all right, what needs to happen to accomplish that? It's like, well, I need to get up, I need to get out of bed, and I need to move some iron around in the weight room, right? That needs to happen if I want to accomplish my goal. And I think so many people just either don't have goals or don't make up their mind about what needs to happen to get there. And then they let days go by unproductive. And then you turn around, it's like, oh, I just wasted all that opportunity. Right. And so just
You
do
need a
it.
goal. Well, that's the
Yeah.
first thing, right? Yeah. You had a 11-year career in the NFL and a handful of different teams. I'm just kind of curious now, having seen the business of it and been part of it. It sounds like you're still a football fan. Do you have a favorite team?
I'm a Bills Mafia for life. I spent the longest of my career was in Buffalo. My daughter was born there. It's kind of where my kids were raised. Josh Allen's like a brother to me, and the community that we had there. Granted, Buffalo's stuck in the '90s. I can say that they know it, and all they have is Bills football. And if the Sabres are doing well, they'll go to Sabres games. But it was so cool because they loved you like family, and it was my favorite city to play in, the best fans in sports, in my opinion. And I still have a lot of buddies on the team, and we'll cheer for the Bills, watch every game still. They're a great team.
That's awesome. That's great to hear. Cool. So one of the ways I start to close out the podcast, I'll ask a couple different things. One is about long-term trends. So I'll ask you this right now, which is what's one long-term trend you see playing out over the next year or several years? It could be about exactly what we've been talking about, or maybe there's some other theme or cool bit of tech that you're really excited about. What do you think?
I think people are underestimating the power of the passive bubble. And as an active manager, we pride ourselves in navigating the passive bubble. And it's something that we've been studying, Michael, especially my partner, for the last couple of years in terms of the amount of passive flows that are being funneled in to the S&P and to the biggest names is only growing bigger. And if you look at a chart of the share of the S&P of, you could take the mags, you could take the top 10 names, wherever you want to pick, it's just getting increasingly larger towards the top, towards now. And so it's a big concern for us because whether it's 401k plans or pension funds or international buyers, when they buy the S&P, it's it's not buying every single stock equally, right? They're getting, like we've talked about, 8% goes to Nvidia and 0.05 will go to 0.5 to a lot of the bottom companies. If you look at the weight of the actual companies in the index that are getting those funds, it's completely disproportional. And so the last rally, I think, has exposed that to a lot of people of like, well, the market breadth isn't where it needs to be. It's like, well, yeah, because you have almost 40% of the top 10 stocks that are carrying this move. And if they go up, the market goes up. If they go down, the market goes down. They're just high beta stocks now when you think about it. And so the passive, and I say bubble because it's growing at a tremendous rate and it can't reach 100%, right? You can't have 100% of not only the index being this passive flow, but investing as a whole has become way less intelligent in my opinion too, right? It's no longer let's look at these and then you don't care about valuations when you're automatically buying the S&P. You're just buying whatever, right? Those allocations to Nvidia, to Microsoft, to Apple, they're not looking at the valuation. They're just buying it because it's in there and it's the biggest stock, And so it's a struggle at the same time because you see it's there and you can't necessarily do anything about it, but you have to navigate it as well. And in our opinion, like you have to ride the wave. Like I said, like the trend is your friend until it ends. So you have to have weight in the mags and in the mega caps.
Yeah.
But when things turn down, like on average, they lose double in corrections. So the S&P draws down 15%, the mags are down 30+%. Now they will also carry you in the long run. If you just look at the mags versus the S&P 493, right? It's a complete disappropriation of where we should be. And so I can go on and on about the passive bubble. You might have to listen to Michael or read some of his work on that, or Mike Green is a fantastic thought leader on the matter, but you have to be able to navigate it even though we see it right in front of our eyes.
Yeah, I mean, super fascinating dynamic in the market, the influence of passive investing. And, I think there's some market structures too, like we need more IPOs. And then, the growth of the private market.
Well, you mentioned IPOs. Why would a company IPO if they're going to be bottom mid-tier and not get any of the benefits of being in the index? Why I would wait. Like if you were XAI or Anthropic or Anduril, wait until you're at least a 600 plus billion dollar company to get the most juice from those flows, right?
And many are, right? And so that's why you're seeing like the developments in the private space and secondary funds and things like that.
Yeah, exactly.
Yeah, fascinating time. All right, so this next segment is called Trend or Fad. I'm going to ask you about a few, hopefully fun concepts to get your quick take. Space tourism, trend or fad?
Fad.
Digital asset treasury companies, trend or fad?
If Bitcoin goes up, trend. If Bitcoin goes down, fad.
Fair enough. The NIL and NIL deals in college sports, trend or fad?
Trend.
Yeah, huge right now. The metaverse, trend or fad?
Fad. Isn't that fad already been proven to be? Yeah. I remember being like, hey, you should buy digital real estate. It's going to be worth whatever with your Ethereum or other tokens. And I'm like, I'm just thinking it through. And even the Apple glasses, whatever they're called, of like sitting by myself or even with other people to be worse and having those on and like just doing my own thing. Like I value personal relationships and in IRL, right? In real life interactions. And so maybe we get to a player one type dystopia at one point. I have no clue, but I think right now that's a fad and people want connection.
Yeah, yeah. And then the last one is AI generated music videos, trend or fad.
Ooh, music videos specifically?
Hear this story recently of, I think it's called Walk My Walk by Breaking Rust. It's a country. It's like hit #1 on Billboard. It's totally an AI generated song and video.
I've seen the AI songs, which are incredible. I've seen the AI influencers. I've seen AI music videos in like that specific though. Is that a trend? I think that's a fad. I think the songs could be somewhat catchy. Like
Yeah,
you hear a song on the radio, you just start singing it and it happens. But maybe something about the video specifically in my mind where I'm like, nah, people weren't
yeah.
real. But I don't know. Anything is possible in the AI space. That's bananas.
I mean, I was surprised by the song. I thought it was pretty good. It sounded like a real country song, and there's a couple of them. I'm just thinking about this. Like, does it matter that I know that the artist is fake? That I listen to this?
Well, even like people have qualms with electronic music of like
Yeah,
they're not playing an instrument. But when you look into it, like DJs and actual artists, digital art, they're making music with a computer. Now the computer is their instrument and they're still composing and putting the sounds that they envision
yeah,
into a work of art, right? Whereas AI music is not a creation of humans at all. And I might have some. I'm not fired up about that personally, like to want to listen to that. I think there's a joy and a beauty in the human emotion
yeah.
of songs. Like that's why we sing and like we share emotion and feelings, and I think there's power in that. But who knows, dude? It'll
Yeah. There's something for everybody these days, it seems.
yeah.
Uh, but awesome, Matt. Thanks so much for your insights and joining me on the podcast. What's the best way for people to learn more about you, follow what you guys are writing about?
Yeah, you can follow me on X, Matt Barkley. You can follow us at silverlight.us, our website, which has our blog that we post weekly with thoughts about the market and just things we learned that week on the VanEck podcast. Here we go. Find me
Awesome.
everywhere.
This is great. Again, thanks so much.
Appreciate it, Ed. Thank you so much.
And thank you for tuning in to this episode of Trends with Benefits.